diversion of funds, siphoning of funds. These two are the terms which credit officers will come across when they scrutinize or when they analyze a notorious loan proposal. Yes, I call it as notorious because they are diverting the funds raised for one purpose but for the other, or they are siphoning it. So what it is, how to understand. First, I'll take you through what do we mean by diversion of funds. If a business raises funds for short-term purpose, let's say it raises through cash credit overdraft, but use it for long-term purpose. Let's say they invest in fixed asset or they make some long-term investment. This is called as diversion of fund because it is not used for the intended purpose. Number two, let's say they raise some long-term funds itself, but they are using that long-term funds for a different purpose. That is, at the time of raising the long-term fund, they would have given a purpose. Let's say constructing building, or let's say for purchasing plant and machinery. But instead of doing this, if they invest that money in some other project, that is, they use for purpose other than the sanctioned one, then that is also called as diversion of fund. Number three, they transfer the raised funds to the related parties or associate concerns. Let's say they transfer it to their holding company or subsidiary company or associates or related parties without any reason. That is also called as diversion. Number four, they are routing the funds through other banks and not doing it through the lender bank. That is also seen as diversion. Number five, they are investing in other companies' debt or equity without getting the approval from the lender if it is prescribed as part of sanction condition. So these are all the instances that are considered as diversion of fund. Then what do we mean by siphoning of funds? Let's say a business entity has been sanctioned fund for a certain specific purpose. But if that fund is deployed for an improper use, we call it as siphoning. Meaning it is used for some purpose which is not at all related to the operations. So we can say this improper use is having two effects. One, it is detrimental to the financial health of the company itself or of the entity, and it is also detrimental to the interest of the lender because the lender has not given for this improper use. So in this scenario, it will be considered as siphoning of funds. So the decision whether the funds are siphoned is actually taken on a case-to-case basis. And if there is a siphoning of fund, that is seen as betrayal of trust. And here we go, Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.